News when you want it with Bloomberg News Now. I'm Nathan Hager.
And I'm Karen Moskow.
Karen, we begin with the latest in the U.S. trade war with Canada and Mexico. Automakers are getting a reprieve. President Trump is giving a 1-month exemption from 25% tariffs to Ford, General Motors, and Stellantis. But White House Press Secretary Caroline Leavitt says the rest of the world is still on notice.
Reciprocal tariffs will still go into effect on April 2nd, but at the request of the companies associated with USMCA, the president is giving them an exemption for 1 month so they are not at an economic disadvantage.
White House spokeswoman Caroline Leavitt and Bloomberg's Kayleigh Lyons reports the automaker CEOs brought their concerns directly to the White House.
The concern here, of course, is that the auto sector is very vulnerable in a scenario in which tariffs are on our North American trading partners. According to Bloomberg Economics, U.S. automakers in particular, for some key parts like seatbelts and airbags, for example, are reliant on the imports of those parts, some 80% from Canada and Mexico specifically, which is why you had the likes of Jim Farley saying recently that these kind of tariffs could potentially, quote, blow a hole in the industry.
Bloomberg's Kayleigh Lyons in Washington. And in another sign of tariff relief, Agriculture Secretary Brooke Rollins tells Bloomberg the administration is also considering carve-outs for some farm products from Canada and Mexico, including potash and fertilizer.
Well, Nathan, the president is set to meet with another group of business leaders, and we get the details with Bloomberg's Lisa Mateo. Lisa, good morning.
Good morning, Karen. And we're talking about those big tech leaders, those behind the companies that are facing the possibility of import tariffs, stricter export rules. Sources telling Bloomberg it includes the CEOs of HP, Intel, IBM, Qualcomm. HP is actually the only tech giant who have confirmed that they will meet with the administration on Monday to talk about trade policy, U.S. manufacturing. Now, this all comes as President Trump has called on Congress to get rid of the 2022 CHIPS Act. The administration also looking for some input on its AI action plan, and that's to improve America's global AI dominance. Lisa Mateo, Bloomberg Radio.
Lisa, thank you. On Capitol Hill, Republican senators have told Elon Musk he needs congressional approval for government cost cuts, or they could be overturned in court. We get the latest on that from Bloomberg's Amy Morris in Washington.
Senators suggested Elon Musk send a package of cuts to Congress for approval through a process that requires only a simple majority in both chambers. Republican Senator Lindsey Graham.
I want to fix it quickly, is what he said. I want to keep the momentum. But from a political point of view, we need to take the work product of DOGE and put it in a rescission package.
Now, Musk met with Republican senators and is set to meet with House Republicans, but any effort to formalize the cuts will likely come after a March 14th government funding deadline. In Washington, Amy Morris, Bloomberg Radio.
All right, Amy, thank you. Well, we turn to the markets now, and a global bond sell-off is deepening this morning as traders gauge the impact of geopolitical volatility on growth and inflation. We want to get the very latest with Bloomberg's John Tucker. John, good morning.
Yeah, and strap in, Karen. This marks what could be a paradigm shift in the global market, and the catalyst is what's happening in Germany right now. Berlin, they reached agreement on a package to try and boost the Eurozone's largest economy. So that means they have to sell debt, lots of it. And as Europe is left to defend itself with a shrinking U.S. commitment, they have to spend more and more on their military. And as a result, they are, for now, abandoning fiscal constraints. And this goes against the very fabric of the post-war German psyche. The yield on the 10-year German bond, the Bund, higher again this morning, up 7 basis points as this bond rout deepens. This follows the steepest rise in almost 30 years. Now, the surprise from Germany comes as global bond markets were already grappling with signs of persistent price pressures. It's led Japan's 10-year borrowing costs to hit a 16-year high. Right now in the U.S., the 10-year, the benchmark up 2 basis points. That is right at 430. I'm John Tucker, Bloomberg Radio.
All right, John, thank you. Well, former Treasury Secretary Larry Summers is warning that volatile policy actions and rhetoric from President Trump are posing the biggest risk to dollar dominance in the world economy in a half century. Summers spoke with Joe Matthew and Kayleigh Lyons on Bloomberg's Balance of Power.
These tariffs are a self-inflicted supply shock wound. Higher prices, less competitiveness because businesses are having to pay more for all their inputs. And because they have to pay higher prices, less purchasing power for consumers, which means fewer jobs down the road.
Former Treasury Secretary Larry Summers also points to the sell-off in U.S. stocks earlier this week as an illustration of investor concern about the direction of U.S. policy.
Well, in Europe, Nathan, EU leaders are holding emergency summit talks in Brussels to beef up their own military defenses and make sure Ukraine will still be protected. French President Emmanuel Macron says he'll discuss using his country's nuclear capabilities to defend the continent.
Our nuclear deterrent protects us. It is complete, sovereign, and French, through and through. Since 1964, it has explicitly played a role in preserving peace and security in Europe. But, in response to the historic appeal of the future German Chancellor, I have decided to open the strategic debate on the protection afforded by our deterrent to our allies on the European continent.
French President Emmanuel Macron spoke through an interpreter in a televised address to the nation. And that's news when you want it with Bloomberg News Now. I'm Karen Moskow.
I'm Nathan Hager, and this is Bloomberg.